My name is Jaynel Christensen, and I've been at Commonwealth Credit Union since 2001. My position here is Chief Growth Officer. At Commonwealth, we are right at $2.3 billion in assets. We serve over 120,000 members. Our field of membership expands across 25 counties throughout central Kentucky, including the Louisville metro area. Our commitment to our members is we better lives through our passion to serve. We're pretty proud of the work we do here at Commonwealth, not only for our members, but also for our team members. Commonwealth was selected as one of the best places to work for the last 6 years running. We have also been named by Forbes magazine as a best financial institution for the last 4 years. And then most recently, we were nominated by Newsweek for Best Credit Union in Kentucky. So pretty incredible work that we do here that helps us to get those recognitions. So in addition to, our purpose of bettering lives, one of the taglines that we use with our members is we see you differently. And, one way that we are seeing our members differently is with our utilization of the Zest model. We are the only credit union in Kentucky using this model, so we truly do see you differently when members come to us for a loan. And then in, March of 2020, all the world kind of went crazy. Like many industries, we faced a lot of turnover during COVID. And I think that for us was a big eye-opener that the way we've done things so far, we're going to have to re-examine that because we've experienced turnover in our underwriting area, which is really critical to risk management for the organization. One underwriter that had, I think 5 years at that point, everybody else was less than 2 years. That's a really limited amount of experience. And they're an incredible team. They're passionate. They're the best of the best. But, they only have the experience that they have. So it was very evident at that point as a growing organization, having the Zest technology was critical. The other piece of, the challenge that we were facing with the workforce beyond that is, we knew that we wanted to continue to serve more members. We wanted to continue to, lend deeper while maintaining our risk levels. And so the Zest technology, the AI machine learning technology, was really going to give us the opportunity to do that and manage our risk. I love working with a company that feels with a partner. I love when we are aligned in who we are and what we want for each other. And I think very quickly in the conversations with Zest, we found that it didn't feel salesy. It didn't feel like they were pushing the product. The product speaks for itself. It'll sell itself if you truly listen to the technology, listen to what they're sharing. It's an incredible product. But beyond that, it felt like it was going to be a partnership, that they were going to work alongside us and they were going to help us succeed. But one thing that, we were fearful of is AI and machine learning technology 3 years ago, especially in the credit union industry, was very new. We were kind of going out on this limb and taking this step, but we needed somebody to be there with us and hold our hand, to guide us, to talk us through what this looked like, to give us the knowledge and the experience to be able to talk to our board about it, to talk to our examiners about it. That was a huge piece of the reason that we selected to go with Zest, is because we felt like that they would be there for us, to be a partner for us, and to help us learn and be educated on the Zest technology, on machine learning, so then we could have those intelligent conversations with our examiners, with our board of directors, with our auditors, which is critical with the adoption of this type of technology. We have our quarterly business review meetings with our client success team. And in that meeting, we spend a lot of time diving into our models. We have 3 models live today. So we have our vehicle model, our credit card model, and our personal loan model. And so we spend time with each model looking at what we approved, what we didn't approve, what was manually underwritten. And then we look at our personal credit union policies in place that caused items to not fall into the criteria that allowed it to be Zest underwritten, but required a manual underwrite. Beyond that, then we look at the changes that we could make to policy and how we could grow our Zest usage through adjusting some of those policies. So maybe it's, reducing the number of trade lines that we have that we require before it can go through a Zest underwrite, or it's changing the income amounts or changing the DTI. And from there, we can come up with those strategies based on the QBR and the information that they provide us. They can then share with us, by making this policy adjustment, your risk remains constant. Or by making this policy adjustment, your risk increases 10 basis points, but your approval increases 15%. So we're able to weigh through those meetings what the value is of making the policy adjustments to increase the Zest usage, to help us again to say yes to more members, and just to continue to build on that automated machine learning underwriting goal that we're working towards. So as part of the QBR meetings, Zest provides us all the information that, we've talked about with the policies and the potential adjustments that we can make. And then we take that information and we bring it back here to the larger team at Commonwealth for that decision. And with the Zest material that's provided, we're able to provide a very comprehensive overview of what the changes to the underwriting policy would be, and then the impact and then the risk associated with those changes. With Zest, we are able to serve more members. We're able to have a bigger impact. We're able to say yes more often, and we're able to do that while maintaining charge-offs and delinquency. We have worked to improve our auto decisioning for years, and in our LOS system, it's limited. It's all based on, a few different boxes that you can check and the adjustments that you can make, but it's not very expansive. With the Zest auto decisioning model, then we're able to underwrite at a much greater rate than we were before. So prior to going live with Zest, we were running about 28 to 30% for our automated approvals. As of 2023, we're really proud that we've increased our automated decisioning to 70 to 83%, depending upon which model. So, one of the things with Zest that was really important is that we wanted to make sure as we grew that we could continue to just maintain our current levels of staffing while being efficient and productive. And we've definitely been able to accomplish that. In 2023, we booked over 3,000 more loans than we did in 2019. And in order to do that, you have to approve a decision a lot more than 3,000. So we were able to produce that many more loans while maintaining the same number of staff that we have today, which is 3 underwriters. We have an indirect underwriter, a direct underwriter, and a float underwriter that goes back between the 2 portfolios. I love talking about our Zest portfolio performance. Like when we have reference calls or when we get to talk with other clients at places, because it's just so incredible. So we've been on Zest since 2021, so we feel like we have a very seasoned portfolio at this point. Our Zest model has approved over $324 million in loans for over 18,000 loans in that portfolio. And then the performance is 32 basis points charge-off ratio and 35 basis points delinquency, which is incredible when you consider that includes 2 models, which are unsecured products, a credit card and a personal loan model, and then also indirect is being underwritten through our vehicle model. I think as an industry, we all know that our delinquencies and charge-offs are rising. It's kind of where we are in this economic state. Our Zest charge-off and delinquency, as we talked about earlier, continues to just outperform our expectations. And especially when you consider the unsecured portfolio makeup. When we compare ourselves to our peers or other industry data, we continue to see that the Zest technology is allowing us to have lower ratios than what others are experiencing. Given the mix of our portfolio and the amount of unsecured loans that we have, we feel like the Zest technology really is helping us manage that risk. In addition, it is going to allow us to strategically continue to underwrite deeper, say yes to more members, and know that we're controlling our delinquency and charge-offs. I think that one part of the Zest technology that we didn't consider when we went live is the value that it would bring for us beyond the decisioning and the loans that were coming to us. through the use of the Zest model, especially on our indirect channel, we are managing that volume instead of trying to find ways to attract that volume. There is kind of a known that oftentimes in the indirect channel, the dealers drive that market. They get to determine, what your upsell is, what their compensation is. And over the last couple of years, we've really been able to reduce some of those items and feel like we've kind of gained that control back as a financial institution, because we have a very stable pipeline of volume, and that comes from being able to provide them a decision in 2.4 seconds. When you provide a fast decision, then you then are, often the one that they send the loan to for funding. At Commonwealth, we have really extensive reporting. Thankfully, our finance and data analytics team put together incredible packets for us and our board of directors each month to review. So we very closely monitor the Zest performance. We share all of that information when our examiners and our auditors come in, and we've not had any questions or concerns brought up with the usage of the Zest model and the implementation of the AI and machine learning technology. Commonwealth Credit Union launched with Digital Storefront in 2018, and a large portion of our loan volume comes through that channel. So as we continue to, get more comfortable with our Zest model, we knew that that was one of the areas that we had to get transitioned over to using the Zest criteria for those pre-screened selections. By this point, we knew that we had enough seasonality in our portfolios, that the delinquency and the charge-offs were performing better than our traditional pre-screen criteria. So transitioning over to using the Zest model to determine that pre-screen criteria was a critical move. In July of 2023, we did our first digital storefront campaign, screening our members with the Zest model technology. And we were able to bring in even more members through that pre-screen than we had at any other time, and say yes to more members. I think this is just another great example of how using the Zest technology is allowing us to say yes to more members and still manage our risk. So we're really excited to continue to expand our use of Zest and just to continue to increase the partnership that we have. One exciting thing that I heard about at GAC is Lulu, and I cannot wait to get to be a credit union that has Lulu. I think the adoption or the opportunity to use the technology that Lulu is going to bring is going to just give us what we need at our fingertips. We have an incredible team with Zest, and they are very responsive to our questions. I think 2 weeks ago, I sent, our client success team 9 different questions that I wanted some answers on, because we're looking about how we can continue to increase our usage. Using Lulu, we could have got those answers immediately. And while I love working alongside the team, I also love the opportunity to be able to self-serve and get instant answers. Really, it's no different than our members. Our members want answers in 2.4 seconds. And Lulu can give me the same answers in managing the risk of the portfolio, understanding the portfolio, in the same time frame that it takes to get a member a decision. We can have that same level of data provided to us. I think the other thing that we're excited about is continuing to find ways to use Zest in loan portfolios that models aren't available for today. So like a home equity line of credit Zest model would allow us to then bring that portfolio onto the machine learning AI technology, as well as down the road potentially, some of the more basic types of commercial loans, like your autos or your secured property or secured equipment. So, not the large commercial loans, but the ones that really impact our communities, the ones that are our partners right around the corner who have, a plumbing business and they just need a new van, that we would be able to use Zest technology to help us underwrite those loans. One of our goals for 2024 is to begin using Zest scoring for pricing, which I think is just another natural step in this progression process as we move further and further along in the adoption of this concept and technology. There's a lot of value, I think, in pricing with the Zest model. I think that the most obvious is the fact that you're actually pricing on what your risk is determined by. But beyond that, there's some cost savings. Some of the other scores can be costly, and by not having to purchase those scores and just simply purchasing the Zest model, or having the Zest model included on your credit bureau, gives you an opportunity to have some cost savings added back that you aren't experiencing right now. AI and machine learning lending is still very new in the credit union industry, and lending in general. I think I said earlier, we are, the only credit union in Kentucky using a Zest AI underwriting model. So, it's not become a, across the board, everybody's using it kind of thing yet. So and I think that makes sense. It's a few years into it. People need to see how this works out, get some seasonality in. But I think utilization of the Zest AI underwriting technology is a game changer for organizations. To be able to serve more members and know the risk you're taking. We've been looking for consistency in underwriting for years, and I feel like we achieved that with the manual underwrite, but not to the degree that we have with Zest. And it's not reasonable to think that we could. Our underwriter likely looks at 15 to 20 factors in that 5 to 7 minutes. That's in between answering the phone, responding to a chat, or talking to the person that walked behind them. Zest is looking at, depending on which model, 190 to 220 different factors in 2.4 seconds. So this accuracy of which it's able to predict risk allows us to strategically say, we can take on more risk, and that's going to help us to continue to lend deeper. So I think, when you talk about how AI and machine learning technology is changing credit unions, we all want to be able to lend deeper, but I think we're going to be able to do it now more strategically while risk is being managed and staying constant. As a credit union, we always want to say yes to more members. We always want to find a way to approve more loans, to reach deeper, into segments of the population. And through the Zest technology, we're able to do that. And we're able to do that in a way that's managed. I know that as we adjust our Zest scoring model and, to allow a higher level of auto approvals, then I can have very clear data that shows me the risk associated with that. So I can see that I'm able to add, 10% more approvals by making these changes. And, that's 10% more of the population, 10% more of the communities that we serve across central Kentucky that we're able to say yes to, that we're able to help get their first car, get their first credit card, get a student loan to go back to school, just to make an impact. For credit unions trying to figure out if Zest is, something that they should move forward with it, I 100% would say go for it. Oftentimes on a reference call, somebody will say, what do you wish you would have done sooner? I was like, signed quicker, started earlier, bought in, faster. Because, where we are today with the 3-year seasoned portfolio, it's not only about us believing in the product. We have the data to prove it at this point. It performs. It's an incredible product. It lets you say yes to more members. You're able to manage your risk, and you just have a bigger impact, which is what we want. We all want to serve more members. We all want to better more lives, and Zest helps us do that. Commonwealth is excited to be a Zest partner, and we want other credit unions to adopt the technology too. The more credit unions that we can get to utilize this technology, the more commonplace it becomes, the more resources that we have out there to talk with one another, to network, and just continue to grow this area of our business. One of the ways that we're able to do that is through doing reference calls for Zest. And I love an opportunity to get to know new credit unions and, the potential new clients. And as a thank you for those reference calls, Zest will donate to our community charities, which is just another incredible way that together we're able to give back to our communities and make an impact through the Zest technology.